So the 77% occupancy is for the existing hospitals. The newer hospitals, of course, both Lucknow and Nagpur are at about 60%. So there is headroom, of course, over there for occupancy growth. But with respect to the existing hospitals, we're looking forward to our brownfield expansions coming on stream over the next 8 to 10 months. And, till then, there's only going to be incremental sort of growth as far as occupancy is concerned, because we're pretty much up to the gills with capacity.
Good morning and good to see you, Vin. Revenues growth has been strong, 18%, and I understand your ARPOB is up by close to around 7%. Could you help us out with what was your surgical contribution to this entire mix that's helped the ARPOB go up?
So we do typically 60-65% is surgical contribution, but within that, what we've seen is a sort of churn towards higher end clinical programs, preference towards robotics, preference towards more sort of complex procedures, etc. And that has kind of tilted the balance. And we've had about a 6 to 7% increase in the sort of high end surgeries that we're doing, and that is effectively what has led to higher ARPOB.
What's the outlook on the ARPOB from here on?
Well, I'm going to avoid giving guidance on ARPOBs as I sort of usually do. But I don't see any reason. This is our 15th consecutive quarter of highest ever performance and, highest ever ARPOB. I don't see any sort of reason for, the past growth to abate. And I believe that should continue.
Abhay, hi, morning. The Dwarka hospital, is it up? I think it was supposed to come up in June, right?
That's correct. So we actually commissioned it, on the 26th of June, 27th of June. So it's up and running now. It's on full steam. We're very excited about this new facility. It's a 300-bed facility and state-of-the-art, which is started in Dwarka. So that is something that is should perhaps break even towards the end of the year. And, good tidings thereafter, hopefully.
The Lucknow and Nagpur ones, as you told us, that'll, they in terms of coming up on full steam, it'll only be towards the end of this year, Abhay?
No, so, we've had a very exciting first 3 months with both Lucknow and Nagpur. Effectively, we stepped into when we acquired these hospitals was last week of March. So really, these first 3 months itself, basis previous year's performance, we've had a 56% increase in EBITDA. It's one thing to have it once you're in operation 8 or 9 months down the line, but it's another thing to sort of do it in the first 3 months. So, that's been remarkable as far as the teams are concerned. And all of those sort of, and this is essentially, of course, due to all the low-hanging fruit that we were able to identify during our diligence stage. But as we put integration synergies and so on, we're going to see a major fillip over here over the next, few quarters to come. As we are now adding clinical teams, we're adding doctors over there, we are, upgrading the infrastructure and so on and so forth, a lot of which we should be getting done by towards the end of the year. And other synergies that we are putting in place. So, but, having said that, a 56% year-on-year increase in EBITDA in both these hospitals, I think is a very, very good start.
Just saying on that sort of line of thought in terms of capacity, and I think you've been the most acquisitive in the hospital space over the last many years. So, is there more coming? There are at least, I think we all know there are at least 2 deals in the market, which we know of. You, of course, know of many more. What is there? Should we expect something more, Abhay?
We certainly hope so. We continue to have net cash positive position as far as our balance sheet is concerned. So, we don't have any net debt. We, in fact, and every sort of quarter, we are contributing to the kitty as well. I look forward to having at least 2 to 2.5 times debt to EBITDA, which gives us about 5,000 to 6,000 crore kitty at the very least, as far as acquisitions are concerned. And I certainly hope that, we'll be able to put it to use in the near future.
Okay, what about the capex? What is the total bed addition plan and how are you planning to fund it? You can take on some amount of debt, as you just mentioned, right? You're net cash positive at the moment. But over the next couple of years, what would the capex look like, and how would you be funding it?
So I think over the next 3 to 4 years, we are looking at capex of close to 5,500 crores. But given our free cash flow generation every year, even at present, we will be able to more than sort of absorb it through internal accruals itself, without raising any external financing in the form of debt or anything else for our capacity addition. This should take our new capacity northwards of, I think, 8,000 beds over the next 3.5 years. And we still have room for acquisitions with our balance sheet, I presume.
Okay, all right. Abhay, I wanted to ask you about your international revenue that's flattish on a quarter-to-quarter basis. As a percentage of sales, what is it likely to contribute going ahead?
Well, it's been hovering around 9 to 10% of our sales. This particular quarter, there was some sort of setbacks in some of the markets in Africa because visas were suspended. I believe they're back now. This has been typically in the past been growing at 20-odd%. We believe that should sort of continue and, exceedingly have a larger share of business that we have. So, we're at 10%, 9 to 10% of our total revenues at present.
Okay, and very small part of your business is MaxLab, but now it's doing close to around 40 crores on a quarterly basis, and it's scaled up nicely, and margins as well have improved. So for the year, should this do around 200 crores odd? And how do you see scaling up of this smaller part of your business?
So, MaxLab has been doing very well. It's been, the growth CAGR has been about 24% now for, I think, many years now. It started with a very small base. And yes, it should certainly cross the 200 level. At this, again, we don't see any reason for their growth to abate. And, along the line, if we get an opportunity for doing any plug-in acquisitions, we don't want to spend too much money. We don't want to use cash to be able to fund any acquisitions in this. But, if we can sort of do any bolt-on transactions into this company, I think, into this vertical, I think we'd be sort of happy to look at those. And once it gathers steam, we always sort of guided that once it grows beyond a particular critical mass, we'd be happy to sort of put it on its own rails and have a separate company out of it.